Hello, welcome back to Commerce Easy Notes. Today we are going to discuss on inflation accounting. The word inflation indicates a decrease in the purchasing power of nation's currency. Inflation is just a quantitative measure of the rate at which the average price level of a basket of selected goods and services in an economy increases over a period of time. That is, when this selected goods and services price increases, the purchasing power decreases. This situation is known as inflation. Now, this period of inflation should be properly recorded. For this, we want inflation accounting methods to be followed. Now, inflation accounting's definition include Inflation accounting definition by American Institute of Certified Public Accountants says, inflation accounting is a system of accounting which but to record as a built-in mechanism all economic events in terms of current cost. Here, inflation accounting records every economic events in the current cost by knowing the price level changes. Inflation accounting has overcome the limitation of historical cost. We'll discuss about the important limitations of historical cost. Accounts does not reflect true of the financial position. It does not consider the purchasing power of the money. The current price of the assets are ignored. Thus, book price and replacement costs differ drastically. During inflation period, comparison becomes difficult. The level of changes in prices are ignored while comparing in the firm or in the period becomes very difficult. So these are the limitations of historical cost methods. Now, the method of inflations are of four types. Four methods are current purchasing power, current cost accounting, and specific and general price level and periodic revaluation method. These are the four methods of price level changes being recorded through inflation accounting. The first method includes current purchasing power accounting, CPPA. Current purchasing power accounting is also known as constant purchasing power accounting, general price level accounting, general purchasing power accounting. This method adjusted the historical cost for changes in general level prices, which is being measured in general price level index. The increase in general level of prices, that is known as inflation, reduces the general purchasing power of the purchasing of goods and services in general, and in case of decrease in general level prices, that is deflation, increases the general purchasing power of the people in the country. Now, CPPA makes all the accounting numbers comparable in terms of general purchasing power by removing the mixed purchasing power element from historical financial statement. Current cost accounting is a second method. Here it is described as modification to historical cost profit to arrive at the surplus after allowing for the impact of price changes on the funds needed to continue the existing business and to maintain the operating capability, whether financed by share capital or borrowings. The main features include the current cost information should be published in addition to historical cost information as a part of the annual financial report. The current cost accounts should consist of income statement and balance sheet with explanatory note. And the current cost income statement should show the current cost operating profit or loss. And the current cost income should also include a figure which is attributable to shareholders. The current cost earnings per share should be based on current cost profit attributable be shareholder should be discussed properly. The third approach is known as hybrid approach, which is specific and general price accounting. It is a combination of two approaches, CCA method and CPPA method previously discussed. Its combination is known as hybrid approach. Here, financial statements are prepared by combining the factors of CCA and CPPA. The fourth method is periodic evaluation of fixed assets along with adoption of LIFO method of inventory. LIFO method is last in first out method of inventory. Here of inventory valuation got the worldwide general acceptance, and it is made use mainly during inflation, and the advantage of this method is to view the periodic revaluation of fixed assets along with the adoption of LIFO method, which can be reasonably reduce the effect of increasing prices. So these are the four methods, and we'll see this four method in detail with example in next section. Thank you for watching.